9:27 Eastern Time, a live look here in Midtown Manhattan. You see the Empire State Building here on this Thursday morning. A gorgeous shot here as all eyes right now really on Wall Street. Oil prices once again on the rise as the Strait of Hormuz seems to remain closed for business, if you will. Talking about this, it's all on the heels of President Trump's announcement yesterday that an agreement had been reached at least to resume trade through the global checkpoint during this ceasefire between Iran and the United States. It sent stocks rather soaring. The Dow was up more than 1,200 points, almost 3%. Huge day on Wall Street, as you've seen that skyrocket. Futures, though, down today just a bit. That agreement, however, lasting only a few hours. The first day of the supposed reopening, seeing fewer ships allowed to pass in the Strait of Hormuz than any day in April, even before the ceasefire, with Iran citing Israel's renewed attacks on the regime's proxy groups in Lebanon. Remember, Lebanon's not a part of this agreement, but Iran obviously seeing this much differently. So how does that impact us here at home? We're going to talk about that with Brandon Arnold, the Executive Vice President of the National Taxpayers Union. Francis Newton is the Chief Investment Officer with Tuttle Wealth Partners. Great to see both of you here. Francis, if I could just start with you. I like to start with things that impact everyday Americans, which are the gas prices. One good thing I guess I could highlight here, yesterday the average, according to AAA, a gallon of gas was $4.16. Today, it's $4.16. It is the first time in 40-something days it hasn't gone up. Is that something we're going to start seeing? Is this the start of the process of the decline?
Yeah, so the opening of the Strait of Hormuz obviously affects supply chain, and that affects inventory. And so the demand against the inventory affects price, right? So the thing is there's a lot of volatility because we're not sure what's going to come out of this 2-week ceasefire. And then the questions around whether or not it is a ceasefire, isn't a ceasefire. Saturday is going to be big for this. But as far as what the markets are telling us, and yesterday I was thinking that, oil was down, and I thought this is a buy the dip moment on these energy prices, because some of the things that have occurred during this war, we've had some structural damage, we've had infrastructure damage, and the energy pricing, shipping costs are going to remain elevated, insurance around shipping costs are going to remain elevated. So some of those things are not going to just wind and unwind as far as the markets are concerned. The S&P 500 needs to trade steadily above its 200-day moving average to say that, look, we're kind of in the green. We had a market sell-off, and then we're heading into the midterms with the market marching higher. We're not seeing that quite yet. PCE came in this morning. That doesn't really have a lot of war data in it. We're looking at CPI tomorrow to see how the markets react to that, and then what the Fed is going to do with interest rates.
Yeah, let's talk about the Fed interest rates. Brandon, the reserve gathering for their monthly meeting, still holding out on President Trump's requested rate cut. Very steadfast on that, as we all know. Even bracing for the possibility of an increase. I hate to even mention it, but this is from the New York Times writing. The minutes showed that policymakers were acutely attuned to the risk that a prolonged crisis could lead to more intense price pressures that, if sustained, could affect underlying measures of inflation. Are we looking at an increase? Are we looking at a rise in inflation? Brandon, is that possible? And what would determine that?
Yeah, I think it's a little too soon to know. Obviously, the PCE data was helpful to some extent, but that only included prices through February. The CPI index, as Francis mentioned, is going to come out tomorrow. Even though that's not the Fed's preferred measure of inflation, it will include data since the start of the Iran war, and that will in all likelihood predict a less rosy picture of the economy going forward, which puts potentially a rate increase on the table. Let's hope that's not the case here, because I think there are other aspects of the economy, certainly the job market in particular, that does need a little bit of a jolt here. So that could run counter if we did see a rate increase materialize at the end of this month in the Fed's discussions here. But and if everything's on the table, I think the only thing that we can reliably count on is some degree of volatility and unpredictability in markets going forward as this war continues.
Yeah, opening bell ringing 2 minutes ago. We'll continue to follow that and watch what happens throughout the day, and obviously those potential peace talks happening tomorrow. Brandon Arnold joining me, Francis Newton. Thank you both. Great to see you. Appreciate that.
Thank you.
So how about this?